after watching the video on the Federal Reserve, I learned quite a bit and had some really good refreshers as well. Starting with the three entities that make up the Federal Reserve, and these are the Board of Governors, which is a centralized national authority. This is actually an agency housed in Washington, D.C. It is made up of 7 members who are appointed by the president and confirmed by the Senate, so it's pretty legit. They write regulations in relation to commercial banks, and they study the trends and conduct forecasts of the economy. The second entity are the reserve banks. They are made up of 12 banks in total that serve their own regions, so 12 regions total as well. Their purpose back when they were created was to provide regional independence for the banking system. Today, they serve 3 main responsibilities: providing financial services, contributing to monetary policy, and supervising commercial banks in their region. So, with the providing financial services, they serve as kind of a commercial bank, and commercial banks can deposit money into the Federal Reserve banks. The reserve banks offer payment services to all financial institutions. And then for the contributing to monetary policy, they serve as banks to the U.S. government. They manage accounts for the U.S. Treasury, for example, and they process government checks. And for supervising commercial banks in their region, they keep the economy healthy. So economists are at each of the locations and they perform their own research. They share their findings with each other and they publish their work and present their work at public speaking events. They also prepare their respective Reserve Bank president for the Federal Open Market Committee meeting. And they strive for low inflation because that's the long-term goal of the Federal Reserve. And then the third entity is the Federal Open Market Committee. They set the nation's monetary policy. This is comprised of those 7 governors from the Board of Governors, as well as all 12 presidents from those reserve banks. They meet about 8 times a year and they vote on policies during these meetings, but active voting members are exclusive only to those 7 governors, the president of the Bank of New York, and then 4 other Reserve Bank presidents, which are on a rotating basis. Those change out. One of the items they vote on is how much money the banks have to lend, which controls how much money is in the economy at one time. They also decide what the federal fund rate is, or the cost of borrowing between the banks. To get the economy to this rate, the New York Fed Domestic Trading Desk buys or sells U.S. securities on the open market, which increases, decreases, or maintains the amount of money that banks have to lend to their account holders, which again controls how much money in total is in the economy at one time. So a couple details that I learned from this video was about the Federal Reserve Act of 1913. I'm sure we've all heard of this in school at some point, but it was a good refresher and felt like a learning opportunity for me specifically. This helped banks acquire emergency cash reserves to not disrupt the national banking system if money was quickly withdrawn by people at one bank. It used the example of in the late 1800s and early 1900s about how there were freakouts that happened at banks. So all the people withdrew money, which created a domino effect for other banks that fell one after the other as people kept withdrawing their money. It also improved the national payment system to exchange money throughout different parts of the country by creating those 3 entities I spoke of earlier. And then a second detail I was unaware about was the Board of Governors. First of all, their existence, their appointment by the president, and then actually what they do. They control the most important foundations of money in the country, which is how much money is in the economy at one time. This video overall taught me a better understanding of the Federal Reserve and how they regulate the banking system and supervise those financial institutions. I don't blink an eye when I go and deposit money at my financial institution and thinking that my money is anything but safe. I have more confidence knowing that federal bank examiners enforce proper behavior amongst those banks. And I actually have a friend who used to work for the FDIC as a bank examiner, and this video helped me get a better understanding of what type of job that is and what they do and the big picture within the Federal Reserve. And unlike those citizens of the late 1800s, I have a lot of confidence in the U.S. banking system and the strength of the Federal Reserve in our banking system. So overall, I really enjoyed the video.